All right, folks, retiring early is a dream come true, but there's one big question which needs to be addressed before we can move ahead with retirement. How do you stay covered for healthcare before you're eligible for Medicare at 65? Hi, I'm newly retired at 55. I'm going through this myself, and I'm not some high roller on a seven-figure income. I did this on a middle-class income, sticking to the FIRE principles, using a bit of discipline to contribute consistently to my tax-deferred accounts, and using Robert Kiyosaki's Rich Dad strategies to build assets. And if I can do it, I truly believe you can too. So today, I'm sharing some healthcare options for early retirees. So whether you're a government employee or work in the private sector, these tips may help you retire early and stay protected. And I even have something for you employees who are in their earlier stages of their career. And lastly, I will highlight a tool that can be a game changer now and during retirement. And this is all about planning smart and staying the course. So folks, let's dive in. Oh, if you're new here, hit subscribe. We're on this journey into financial freedom together. Go. As I was planning my early retirement, healthcare was a major factor. And you cannot pull the trigger on retirement until you have this figured out. And without an employer plan, costs can really skyrocket and nobody wants to drain their savings on medical bills. This is what happened to my uncle who married into the family when he married my aunt. Later in life, she was diagnosed with a significant ailment which warranted a lung transplant. The lung transplant was semi-successful. It lasted for a while, but she ultimately succumbed to complications. My uncle later divulged that he once had over $1 million saved for retirement. Even with their major medical health care plan, that $1 million nest egg was all but depleted by the time she passed. And this was not something that they counted on. As unfortunate as it was, I share this because these unexpected situations do happen, and we need to have the best coverages possible, especially as we move into our senior years. But folks, don't worry, there are solid options out there, whether you work for the government like I did, or in the private sector. And today, I'll break down the big three. That's the Affordable Care Act, the FEHB, and COBRA. I'm not going to spend a whole lot of time on them, but I have others like the international health plans for travelers like me. I'll also discuss some of the other options to consider for my younger viewers, which you can begin working on now. Lastly, I'll discuss a game-changing savings tool called the Health Savings Account. You got to have some insurance. So when I decided to retire at 55, I leaned hard on federal benefits, particularly the Federal Employees Health Benefits Program, or FEHB. I felt like it was a weight off my shoulders, knowing that I could keep my health coverage. To carry FEHB into retirement, you need to be enrolled for at least 5 years before you retire. So what I love about FEHB is that the government still pays about 72% of your premium, just like when you were working. Now the difference is, you are now taxed on your premiums as a retiree where you weren't as a federal employee. In 2025, that could mean a savings of up to $646 a month for self-only coverage, or $1,500 for a family plan. Now that's real money that I can use for travel or saving for the future. The FEHB gives you so many choices: HMOs, PPOs, consumer-driven plans. I spent time picking the one that fit my life, which I'll talk about later. So one tip, if you're not yet 65, you can pair the FEHB with the Medicare Part A plan. Now you might be thinking, how can I pair the FEHB with Medicare if I'm under 65? Because normally Medicare starts at 65, but there are exceptions. Like if you qualify early due to a disability, if that's you, you can enroll in Medicare Part A, which covers hospital costs and is usually premium free as soon as you're approved. So with a little planning, you can make this work just like I did. Okay, now I'd like to move on to the Affordable Care Act. If you retire from the private sector or a federal employee who didn't qualify for FEHB, the Affordable Care Act Marketplace is your friend. At healthcare.gov, you can shop for plans with comprehensive coverage. Now, similar to the FEHB, it's packed with plans that cover everything. That's preventative care, prescriptions, hospital stays, and in 2025, premiums average between $381 to $507 a month, depending on your state and also your age. Now, the best part, if you keep your income low in retirement, you might qualify for tax credits or cost-sharing reductions that cut your deductibles and copays. So I'm passionate about this because I know how it feels to worry about healthcare costs. The Affordable Care Act will be the tool a vast majority of early retirees will use to bridge that gap into Medicare. Now, a hack I love is sign up for the high deductible health plan on the marketplace because it's cheaper and it lets you use the health savings account, which I'll get into in a bit. And don't forget, losing your employer coverage lets you enroll outside of open enrollment. So you have 60 days to pick a plan. So let's talk about COBRA a little bit. I'm not going to spend a whole lot of time on this, but if you just need a bridge to keep your employer's plan while you retire or figure things out, that's where COBRA comes in. It lets you stay on your employer's health plan for up to 18 months after retiring. It's great for keeping your doctors or just your coverage, but here's the catch. You pay the full premium plus a 2% administrative fee. And with no employer help, that can be pretty expensive. Like for me, it would have been way too expensive compared to the FEHB. But it's a solid option for private sector folks waiting for the Affordable Care Act enrollment or planning to move abroad. Speaking of which, let's talk about international options for retirees who love to travel like me. Since I love traveling, having a health plan that covers you outside of the US is a must for my early retirement. So luckily, I chose a plan which does just that. I have to pay out of pocket and get reimbursed once I submit claims, but it works for me. And if I didn't have this, I'd have to consider an international plan, sort of like Allianz Care or Cigna Global, that have a robust network for expats. Also, there's Safety Wing is another example with coverage starting at $50 to $100 per month, depending on your age. It handles emergencies abroad, like hospital stays, and it's flexible for globetrotters. So here's a little travel hack for you. Traveling in retirement is my passion, and I want it to be yours too, if that's what you want. A hack you can use: pair an international plan with a high deductible plan for US coverage. It keeps costs down so you can explore the world without worrying. Planning like this is what let me retire early, and I know it can work for you as well. All right, so let's move into the health savings account. One tool that changed everything for me is the health savings account, or the HSA. I started mine probably about 5 years ago, and it's been a pretty significant part of my FIRE strategy. Now, to qualify, you need to enroll in a high deductible health plan with a minimum deductible of $1,650 for individuals or $3,300 for families in 2025. You can't be on Medicare or another non-HDHD plan. If you're eligible, you can contribute up to $4,300 for self-only or $8,550 for family coverage, plus $1,000 extra if you're over 55, like me. Why is HSA so powerful? Because it's triple tax advantage, folks. Contributions are tax deductible, earnings grow tax-free, and withdrawals for qualified medical expenses like premiums, copays, and even some Medicare costs later are all tax-free. That's great. And you can also invest it in the stock market and grow tax-free. It is a powerful thing that if you are relatively healthy, you should look into. Use your HSA to pay for qualified expenses tax-free. This is if you need it. Now, if you're relatively healthy and do not participate in extreme sports like skydiving, you could potentially save thousands over time. So it's not magic, it's planning and sticking to it. And I want you to have that power too. So here's another tip. If you're in your 20s and 30s, consider joining one of the armed services. If you serve a full 20-year commitment and retire, then you could get TRICARE or VA medical benefits as your primary health care before Medicare kicks in. Even if you don't want to join the service full-time, the Reserve or National Guard can be a great option to get coverage as early as your late 50s, depending on how many deployments you serve, right? And I know about this because I'm a retired reservist. And at the age of 60, TRICARE kicks in as my primary health care, and I don't have to pay for FEHB anymore. Okay? So this is just an option, right? Early retirement doesn't mean stressing about health care. Whether you're sticking with FEHB, shopping at the Affordable Care Act marketplace, using COBRA, or traveling with international plans, you've got options. Now pair them, if you can, pair them with the HSA and smart cost management, and you're in a good spot. If you're retired military, then you're all set. So what's your biggest healthcare concern in retirement? Drop it in the comments. I'll try to answer them. Next up, I'm sharing on how I plan financially to retire at 55, so don't miss it. Like, subscribe, and hit the bell to stay in the loop. See you soon.
Coverage will save your life. That's right. I mean, we all gonna die, but at least if you got some coverage, you will die on a mattress.